I think the strong dollar is acting as a real magnet to global capital. So when you think about investing, you think about, where am I getting capital appreciation, but where will I get the double bang for my buck in terms of I'm investing in dollars and the dollar's appreciating. I think that's part of the puzzle. The other piece of it is what's the strongest growing economy in the developed world? That continues to be the United States. And I think that as we look at that and on top of businesses that are doing a great job at growing earnings, I think that the U.S. continues to be the place to be in terms of equity investment.
With Miranda Kahn, J.D. Hayworth back with you now on America's Forum. We just heard Art Hogan of Wunderlich Securities on Bloomberg Television. He was responding to the question, why are stocks at record highs when profits are going in the other direction?
Yeah, the market has been on a rebound recently, but as the saying goes, nothing lasts forever. So the question some are asking right now, is that bubble about to burst?
Good question to ask our expert who can talk money matters with us. Joining us via Skype, our friend Sean Hyman, editor of the Ultimate Wealth Report and author of the book, The 6 Keys to Financial Success. Sean, it is so good to have you back here on America's Forum. What do you make of Art Hogan's comments? Is the positioning of the dollar always going to draw foreign investments into our companies?
Well, I would agree with him only up to the point of this is what has happened and is happening. But as far as what is going to happen, I don't believe that's the case. In other words, I don't believe that the dollar continues to be the place to be. I believe it has been the place to be. I believe somebody would be better off in euros, Aussie dollars, or things of that sort as far as currencies. As far as stock markets, yes, our stock markets are high and they are elevated right now. So they have performed well. But I don't expect them to perform as well over the next 12 months as they have over the past 12 months. So I think right now there's a lot better places to be, like Europe, for instance. European stocks are likely of much greater value right now than are our U.S. stocks.
Sean, Paul Farrell of MarketWatch says he expects stocks to fall 50% next year, already calling it the crash of 2016. He even compared it to the crash of 1929, which triggered the Great Depression. Can't believe I'm saying it. I don't even like saying that. How legitimate are his concerns?
Well, it could happen. Most corrections generally 10, 20, 30%, something like that. But we have had in modern history, since 2000, 2008, we have had a couple of corrections that were on the tune of 40, 50% in our major stock market averages. Obviously, the volatility has kicked up a lot more in recent times as stock markets are getting high. The economy is not performing as well, so there's kind of a little bit of a decoupling of what markets have done versus what the economy has done. So lots of volatility there. We continue to stack up a lot of debts, and the public sentiment is not probably as good as what it used to be. So when you combine all this, you do get some extreme volatility, and we could see that later on this year, earlier next year.
Sean, as you were answering the question, we were seeing images from back in 1929 and the newsreels. We have a president now, and we got about a minute and a half left. President Obama believes in higher taxes, that the rich need to, quote, pay their share. Does that redistributionist model really help build up an economy? What's your take on what Washington should be doing or maybe should not be doing?
Yeah, that does not work. One, there's not enough rich to go around. So you can tax them, and there's only so many that are in the rich class. Really, in order for them to accomplish what they want to accomplish, they've got to bill it as taxing the rich and then come down and tax the middle class. And that's just going to be horrible on our economy. So, it's not the way to go. If anything, they need to work with businesses to repatriate capital back to the U.S. to add the jobs here. That's the way to go.
So, Sean, in the few seconds that we have remaining, what would you advise us to do, the American people?
With our money, 30 seconds.
Well, with your money, I would invest in European markets. I would probably, taper back some of your money in U.S. markets. Pad your savings for, rougher latter 2015, early 2016. Make sure you're living well below your means.
Wow. So a little austerity. The key, and international investment. Miranda, our friend Sean is Skyping in deep in the heart of Texas, and that means we got to talk about Texas tea when we come back.
Black gold.
Yep, oil, or as some folks would say, Earl. That's right. Sean Hyman back to talk about prices at the pump and more as we continue on America's Forum. Alongside Miranda Kahn, J.D. Hayworth back with you now on America's Forum. Let us continue our conversation with our friend Sean Hyman, editor of the Ultimate Wealth Report. Time to talk about black gold, Texas tea, a.k.a. the price of oil, since you're Skyping in there from deep in the heart of Texas. Now, the prices have bounced back, and we've seen an upward movement at the pumps. What do you see happening with crude oil prices in the not-too-distant future, Sean?
Yeah, I think oil prices will continue to be volatile. They typically are when they're in a bottoming period. I mean, the last time we came from close to 150 down to 33 or so, it bounced from the mid 30s to mid 40s or so, back and forth for a number of months before heading back higher up into the 100s plus area. And I think that's what we'll see happen again. I mean, we will probably be volatile for some months in the 40s and 50s per barrel. But I think we are trying to find a floor here, find a base, and ultimately towards the latter part of the year, we could be back to $70, $80 a barrel oil.
So what does that mean to consumers at the pump?
Well, it means, to prepare for higher prices ahead. It means to, I wouldn't go out and buy the gas.
Along. We're all going to be traveling, going on those road trips and flying.
I wouldn't go out and buy the SUV. That's what a lot of people are doing right now. They're saying, hey, gas is low. It's going to be low. We've heard everywhere it's going to stay low. So let's go out and buy that SUV we always wanted. But here's the problem. Most people are going to buy an SUV on a 3 to 6 year payment, and gas prices are going to be up probably 1 year from now. Even if it's 2 years from now, they're back to higher levels. You still got 3, 4, 5 years of higher payments for the SUV, and you're stuck back with the high gas prices. So stay with efficient vehicles, pad your savings, pay down some debt and get ready for the higher prices to come. Again, they're not coming tomorrow, so you've got this a window of time, so make sure to do good with it.
Hey, Sean, the word you've used thus far is volatility, and we've got about 2.5 minutes remaining. When I was in Congress, Intel was one of the big employers in my district. They have a new ad out, I think, addressing all our concern about cybersecurity. Let's take a look at it, then I want to get your thoughts.
At Intel, they have technology that lets your face be your password. Oh, that is one secure password.
Intel, this is where it all changes.
So that spot tells us it's going to be facial recognition. Are we going to that, and how secure will that be?
Well, it's possible that we could go to facial recognition or thumbprint recognition. We definitely need to get away from the password for sure. The password was kind of like Internet Security 1.0, and we've got to move past that because those are getting hacked so easily. So we've got to come up with something that is far better. Not too long ago, I had a laptop that gave facial recognition. So I mean, the technology is there in its infancy, and it's certainly going to develop out. But I could simply look at my camera, and it would log me onto my computer. So I mean, I like that. Not to mention, it's very consumer friendly. I mean, we've got a gazillion passwords out there, and it's hard to remember them all. And you know what people do? They write them down somewhere and stick them someplace, and they tell us all not to do that. But how else do you remember 50 passwords to your favorite websites?
Or some businesses just use password.
Yeah, it's got a lot of people in trouble.
Right.
So with cybercrime solutions being so much in demand, should investors be looking to acquire shares of cybersecurity and IT firms like Intel? What's your advice?
Well, yes, but I think at better valuation. So Intel is very much a blue chip company, deep pocketed, billions of dollars of cash on its books. So a great, excellent company. The problem is it's gotten a little high here recently and needs to pull back. So I would say only buy Intel on deep dips, and we will get those. Microsoft's taking a deep dip. Intel will take a deep dip. We're going to get a market correction in the coming months. You can use that opportunity to buy up good companies like an Intel. And so, yes, but only on dips.
So again, it's buy low, sell high, and there will be volatility. I think I've got this straight. Sean Hyman, as always, we appreciate your insights. Again, Sean is the author of the book, The 6 Keys to Financial Success. And to learn more about the Ultimate Wealth Report, simply go to moneynews.com/UWR for, guess what, Ultimate Wealth Report. So good to have Sean, whether it's oil or high tech,
right,
or just where the economy is headed. It's good to have him here to tell us what's happening.
Yeah.
When we come back, if you're frowning about the economy, you'll smile about Comedy Corner.